There was one strategy for Forex that I actually shared, I don't know, probably about 2-3 days ago. No, I'm sorry, 2-3 months ago. And it actually was very well accepted by you guys as my audience. And more importantly, many people are making tons of money using this specific Forex strategy. So in this specific video, I'm going to share it to you right now in 2021 with a full tutorial as to how you're supposed to use it. And more importantly, how you are going to be able to make money in 2021 with a simple moving average strategy. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, we're gonna be talking about a moving average strategy for Forex beginners for day trading. And if you wanna learn this, and if you're a very beginner in Forex in general, then I do recommend you to actually join a live training that I'm going to have in Forex this week. It's gonna be a whole new way of watching Forex. And more importantly, it's gonna be a 100% free training. I have the link in the description of this video if you wanna check it out. But if you're very new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, then this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. And before I actually jump into the content of this video, as I mentioned at the beginning, I want to give you a warm invitation to a free live webinar that I'm going to have for Forex trading beginners this specific week. So I'm having the link in the description of this video so you can register for that free webinar. It's gonna be super amazing because you're gonna start learning Forex from zero all the way up until you're able to dominate strategies just like this one and start making money with Forex trading. So if you want to be part of that specific webinar, the invitation is right there. The link will be in the description of this video. Now, with that being said, let's jump into the content. Okay, so for this specific strategy, I'm going to be using TradingView, and you can use that as well. You can use, I don't know, what's this, MT4, MT5, whatever you want, but I do prefer that you use TradingView since it's the most neutral trading platform out there. And more importantly, that it's 100% free. So TradingView is my favorite charts option available. But let's go ahead and dive into the trading. So what I'm going to do is that I'm actually going to go and replay the spare. Go ahead and take it all the way right here. I don't even know if that's actually a good entry point of the trade or whatever, but the only indicator that we're going to be using is actually the 50 moving average. Okay, is this one right here. You go to indicators, you type in moving average. Is this one, the simple moving average. You click on it, and then once it appears right here, you go to the settings, change it to 50 and choose whatever color you want. I make it a little bit thicker so that I can actually have some good entry points. So here's the deal. It is based on change trendings, okay? So that basically means that once you actually see a change on the trend, then you enter for a position. How do you identify a change on trending? It's very simple. The moving average determines what is the direction of the trend. So if the moving average is actually going up and it's below the candlesticks, then that is an uptrend, okay? That means that the price is rising up. And if it's the opposite, the price is actually, the moving average is going down and the candlesticks are below the moving average, that's basically a downtrend. As simple as that. This specific point is where we are going to be entering the trades. Now, how is it that we determine when to enter the trade? It's very, very simple. So there's going to be a moment when the candlesticks are going to touch the moving average, as you can see right here. But we need to identify 3 factors before we enter a trade using this specific strategy. The factor number 1 is that the candlestick closes below or above the candlestick depending on the direction. So if it's an uptrend and we're looking for a change on trending for a downtrend, then what you need to look for is that the candle closes below the moving average, just like this one right here did. It closed below. Now, second factor that's factor number 1. Second factor that we need to see is that the candle closes without touching the actual moving average below it. So for instance, let me just go ahead and zoom it in a little bit more right here. So the first setting is actually this one. It closed below the actual candlestick. The second one, as you can see, it closed and it didn't touch. So first parameter has been met and second parameter has been met. What is the third one? The third one is that the candlestick closes below the lowest point of the previous candle. So as you can see, this candle, this was the lowest point. This one right here. The lowest that the candle actually went, and then it went back up, but that was the lowest. And the next candle closes below the actual lowest point of the previous candle. Once that happens, this is the third parameter. This is where you're gonna enter the trade. As simple as that. What type of trade? This is gonna be a sell position. You enter a sell position right here, and here's the deal. When you actually enter the trade, I want you to actually set the stop loss according to the ATR. What is an ATR? You go to indicators and you go to average to range. You click on it and it will by default be measuring the amount of pips within the last 14 candles. So as you can see in this area, this is the average to range. It gives 119. Now the last decimal does not count. So we're going to focus on 11. 11 pips is basically the average of the last 14 candles. But since we don't want to risk the trade, what we're going to do is that we're going to enter a stop loss for at least 2 candlesticks, which means twice the average to range. If this is too complicated for you, make sure you rewind the video many times until you fully understand it. Okay, so that means that 22 pips will be my stop loss. There you go, that's my stop loss. And this trade usually should go at least to 2.0 risk reward ratio, like right here, at least. As you can see, so my take profit is, my stop loss is actually 22 pips and my take profit is 44 pips. Now, here, you should be risking 2% of your balance, which means that here you should be making 4% increase in your account. Now you can target more because this specific strategy, when it drops really hard, and when it jumps really hard. You can even try to get it for at least, I don't know, 3.0. And then once you actually get it for 3.0, keep on doing some trailing stop in order to make more money. I'm gonna show you how to do trailing stop at the end of this video, so make sure you stay up until the end. But now let's go ahead and finish this one. So as you can see, this is exactly what happened. Now this, let's go ahead and do the opposite, right? The opposite should be a change of direction on a buy option. So as you can see, this one, for instance, it closed above the candlestick, right? So first parameter has been met. Then the second one actually got open and closed without touching the actual moving average. So that's parameter number 2. But we never had a candlestick closing above the highest of the previous candle. Instead, it went down. So we don't enter this trade. Why? Only 2 parameters were actually met. So we're gonna continue looking for it. And here, as you can see, we have it again. It closed above, so that's number 1. It closed without touching, so that's number 2. But nothing ever closed above the highest, because here you need to close above the highest. It never did. So instead, it went back down. So right now we're gonna click on the replay button so that we find a new trading opportunity, and then we're able to determine whether it's good or not. And you're gonna help me out. You gotta let me know in the comment section what you think when we place these trades. Let me know, hey, I would have entered this trade, or yes, not enter. So let's go ahead and dive into it. So let me click on the play button. Okay, here, let's go ahead and see. Okay, here we had a huge jump and we have 1 parameter met. It closed above. Then this one, no, this one didn't, it did touch the moving average, so we're not gonna focus onto it. So this one, it closed above the moving average, and this one closed without touching. So we have 2 parameters met, right? We need to have 1 candle that closes above the highest point of the previous candle. So let's go ahead and see if we find that out. No, you see, it actually kept on dropping. Oh, this one right here, hold on, we missed it. But here we have the first one, right? Close above, 2, close without touching. Now here, as you can see, this was the highest and this candle closed above the highest. So this is the entry point. So let's go ahead and enter a trade right there, a buy option. We're gonna see if we win it or not right here when it closes. Again, we're gonna see the average to range. The average to range, if you notice, it has changed to 16, probably because of these big ticks that we had right here. So that means that basically 31 will be our take profit. And we're gonna set the take profit all the way to 2.0. Due to this long fix, we're gonna get it at 2.0. There you go, 62 pips. So let's go ahead and play the button and see if we actually are able to win this trade. It's kind of bouncing in there. It drops. Oh, it's gonna hit the stop loss. It did. So we actually lost this trade, which is completely fine. We're never gonna win 100% of the trades. And one thing you should realize about this is that the average to range keeps on moving. So yes, we actually ended up losing this trade. However, here we have a new entry opportunity. Why? Because we are looking at one. It closed, actually this one, well, both of them. It closed below the moving average and this one closed without touching the moving average. Let's see if it meets the third criteria and a candlestick closes with the lowest. Nah, it didn't. Right here, it didn't. Probably there are some news in regards to this specific pair at this specific moment. So we don't enter this one because the criteria was not met, right? Now, again, it started jumping again, and now it's time for us to look for a buy option. Now, here we have the first criteria, it closed above. A second criteria, it closed without touching, and this meets the third criteria. Why? Because it closed above the highest of the previous candle. So we're gonna enter a buy option right here. And you can realize that I'm not just entering the ones that I know that are gonna be winners. Instead, I'm entering like if it was a real-time entry point. Now, the average to range right now shows 14, so we're gonna go with 28 pips and stop loss. There you go, 28 pips. And we're gonna go at 2.0 in risk reward. So we click on the play button and we're gonna see if now it keeps on jumping or it hits the stop loss again. Okay, it did hit the stop loss again. Let me just go ahead and pause it. But take a look at the volatility in this specific part of the actual pair. Now, once you actually see this, if you see this neutral movement, just stay away from it, all right? Don't stop entering those trades at least for 1 or 2 days. One day would be enough. Why? Because as you can see, there is no clear trending, right? There's no clear trending. Now it's changing on the trend and now it's jumping. So if you notice, it tried to jump before, but it couldn't, and it kept on bouncing around, and now it continued to jump. Now this would have been a good entry point, and let's see if it made the criteria. Number 1, it closed above the moving average. Number 2, it closed without touching. And number 3, it met the criteria of closing above the lowest, the highest point. So here will be the entry point, and here we have 16 as a average to range. So we're gonna move it all the way to 32. There you go. And 2.0 as a risk reward. 2.0. There you go. And I'm just gonna move it because it seems a little bit crazy. And now we're gonna see if the take profit, when the take profit will be touched. So as you can see right here, it was touched a few hours later. It can be even touching 3.0. Let's go ahead and move it to 3.0. And yes, here's where it got touched. So even though we lost a couple of positions, 2%, 4%, and we made 6% in here. So that means that we still have a 2% profit. Let's go ahead and keep on making tests, okay? That's basically the point of this video. It's going to be longer than usual, of course, but tell me in the comment section right now, would you have entered any of these 3 trades? Let me know. And let's go ahead and continue looking for trading opportunities. Right now, obviously, we're looking for a downtrend, change on trending. So we're gonna see if it actually goes through. Okay, we have 2 entry points in this specific area. Well, let's go ahead and see. This is the first one, right? It touched a close below the actual candlestick, the moving average level. This one, number 2, it closed without touching the moving average. And now let's just wait and see if we have one candle that closes below the lowest level. There you go. Here we have a good entry point. Here is where we're going to enter for a sell position because it closed below the lowest level. Now we take a look at the actual average to range. We can see that it's 17, so that means that 34 will be the actual stop loss. So we're gonna leave it at 3.0 as a risk reward ratio and see how that one actually goes. 102 pips. Just keep in mind that Euro USD has actually been an uptrend for a long time. This one right here, it's kind of in there. It didn't hit the take profit. There you go. Boom. Take a look at it. Take a look at this beauty, right? It hit the take profit and 3.0 risk reward, and it was barely in the loss area. So out of these 4 trades, we have lost 4% in here with these 2 trades, minus 4%. Then we made 6% here and 6% here. That means that out of 12% that we made in profit, we lost 4%. That means that we have an actual 8% increase in our account based on these trades only. We're gonna do one more example, and then I'm gonna show you how to do trailing stop, and we're gonna cut the video right there. Again, I'm just looking at the replay. This is for September. So let's see if we actually find a good opportunity. This one is kind of bouncing in there because it closed above and it closed without touching, but now it's kind of dropping. So I don't think we're gonna have a good entry unless the third criteria gets actually met. As you can see, it didn't. So yeah, no, this one didn't meet the criteria either. Let's just wait. There's supposed to be a change on trending pretty soon, and it should start jumping. That's basically what we're waiting for. Poof, probably 3-ball news right there. There you go. So here it met the criteria. We're gonna see this is a risky one because of this huge jump, but let's go ahead and see. It closed above the actual moving average. It closed without touching this one right here. And now we're just waiting for the closing candle above the highest point of the previous candle. So it should be this one right here. Let's go ahead and enter a trade right there. Boom. And let's see, average to range says 14. So 28 pips should be enough. 28 pips. There you go. And we're gonna leave it at 3.0. There you go. This is the risk reward. Let's just go ahead and move it to see if it actually gets done. And let's just wait and see. Boom, there you go. You see, obviously it was because of some sort of news, but it's another 3.0 risk reward. So another 6% profit along with the 8% plus, that brings me a 14% increase in my Forex account. Now, many people actually like settle with 1% to 2% increase, but 14% is actually super good. So take a look at this easy strategy. Now, just to finish up with this video, let me show you how you should be doing trailing stop. Trailing stop basically means moving your stop loss and moving your take profit so that you can keep on making money or avoiding potential losses in the road of a trade. So as you can see, this trade actually moved pretty straightforward to down. But if you actually want to do some trailing stop, what I would have done at this area would be to move my stop loss to the entry point. Why? That way I have a risk-free trade. I'm not gonna lose anything regardless of what happened. But once it actually dropped around this area, one thing you could do is actually move 20 pips, for instance, or depending on the average to range, let's say 14, 15 pips, the stop loss area to a profitable area like right here, and then move your take profit even lower. Let's say 4.0, right there, 4.0. So if you notice, it never touched, again, the stop loss, and instead of making 6%, you could have made 8%. That's 2% more profit, right? So that's actually what trailing stop is. Now, if you want me to make a full video or have a full training in regards to trailing stop, make sure you put it in the link on the comment section. Even though I have one, I can make a more detailed one if that's what you're looking for. So I hope you really enjoyed this strategy. It's very easy to use, and more importantly, you can use it as a fully beginner, but I do recommend you to test it on demo so that you can get more familiar, and more importantly, so that you can actually get the hang of it and start making money without risking your real balance. So if you enjoyed the content of this video, please give a like on this specific video so that you can help this YouTube channel keep on growing. And more importantly, if you have any questions, you can put them in the comments section below. I'd be glad to take a look at those questions. And if you haven't subscribed to my channel and you want to see more videos just like this one, make sure you hit that subscribe button below. Thank you for watching, and I'll see you on the next one.